Today we're going to be discussing the importance of credit score, how they are calculated, and the steps you can take to improve your credit score. So let's get started by understanding what a credit score is. A credit score is a 3-digit number that represents your credit worthiness. Now this is based on the information from your credit report, which is the record of how you've borrowed and repaid money in the past. Your credit score is used by lenders, landlords, and other organizations to determine your credit worthiness. So basically, it's a snapshot of your financial history that helps them decide whether or not to approve your application for credit loan or a rental agreement. So what are some of the factors that go into determining a good credit score? The most important factors are payment history, credit utilization, credit history length, mix of credits, and recent credit inquiries. The first one, which is your payment history, is the most important one, as this accounts for about 35% of your credit score. It includes the information on whether you pay your bills on time and whether you have any outstanding debts that have gone into collections. Then the credit utilization, or how much credit you use relative to how much credit you have available. This accounts for about 30% of your credit score. Longer credit history, a mix of different types of credit, and a limited number of recent credit inquiries also have an impact on your credit score. So if you have a low credit score, does that mean you're a bad person or a high-risk borrower? Well, not necessarily, because a low credit score can be as a result of a variety of factors. It could include a lack of credit history, financial hardship, or even simple mistakes. So it's important to remember that a credit score is not just a reflection of your character or your worth as a person, but rather a reflection of your financial behavior. So how can you check your credit score? Now you can check your credit score for free once a year from each of the 3 major credit reporting agencies: Equifax, Experian, and TransUnion. Additionally, there are many websites and apps that offer free credit score as well. Now it's important to check your credit score regularly to ensure that the information on your credit report is accurate, and to catch any errors that could be damaging to your credit score. Now let's talk about specific steps you can take to improve your credit score. Okay, by the way, if you're enjoying this video, I'd like for you to hit the like button and subscribe to this channel, share this video, and head over to our Instagram page and follow us there at Z Financial Hub, and also stop by zfinancialhub.com to check out more content. Now let's head right back into the video. And the first step to improve your credit score is to pay your bills and monitor your payment history. Now, no strategy to improve your credit score would be effective if you pay late. Now, late payment can stay on your credit report for about 7.5 years. So it's important to make sure you pay all your bills on time. Make at least the minimum payment, although it's not recommended. But if you can't pay the full amount that you owe, contact the lender right away. Ensure you don't skip a payment, even if the bill is in dispute. You can also subscribe to getting electronic alerts from your financial institution. They can send you an electronic alert when the credit available on your credit card falls below a certain amount. The next step is to keep your credit card balances low. High credit card balances can indicate to lenders that you're overextending yourself financially. So try to keep your credit balances really low. The next step is to limit your requests for new credit card. There are 2 types of inquiries into your credit history: the hard and soft inquiry. A typical soft inquiry might include you checking your own credits, giving a potential employer permission to check your credit, checks performed by financial institutions with which you already have a business, and credit card companies that check your file to determine if they want to send you pre-approved credit offers. Soft inquiries will not affect your credit card, but hard inquiries would actually affect your credit card. So the next step is to dispute any errors. So if you find any errors on your credit report, dispute them with the credit bureau and the organization that reported your error. A mistake on one of your credit reports could be pulling your credit score down. So disputing your credit report errors can help you improve your credit score quickly. Now you're entitled to free reports from each of the 3 major credit bureaus. Use annualcreditreport.com to request for them and check for mistakes, such as payments marked late when you paid them on time, or someone else's credit activity mixed with yours, or negative information that is owed. So once you've identified them, dispute those errors. Next step is to keep old credit lines open. So long credit history is a positive factor in credit scoring. So keeping your old credit card open, even if you don't use them, could be beneficial. The next step is to consider credit counseling. So if you're struggling to manage your debt, consider working with a credit counselor or a financial advisor who can help you develop a budget and a debt repayment plan. The next step is to get a credit builder loan. Now, these types of loan are designed for people with little or no credit history. They are small loans that are repaid over time, and they can help you establish a positive credit history. The next step is to become an authorized user. So if anyone you trust, like a parent or a spouse, has a credit card with a long positive history, ask them to add you as an authorized user. That adds the account to your credit report, so its credit limit can help your utilization. Authorized user status allows you to benefit from the primary user's positive payment history. Now, the card holder doesn't have to let you use the card or even give you the account number for your credit to improve. Make sure the account reports to all the 3 major credit bureaus, the Equifax, Experian, and TransUnion, to get the best. Now, the next step is to be consistent. Now, your credit score is a reflection of your financial behavior over time, so it's important to be consistent with your payments and credit usage. This means paying all your bills on time, every time, and keeping your credit card balances low. I mean, spend what you can pay and pay what you can spend. So improving your credit score actually takes time and effort, but by following these steps and being consistent with your payment, you'll be well on your way to building a better credit. So if you enjoyed this video or you found value at any point in this video, please consider subscribing to this channel, and don't forget to hit the like button, share this video. And if you're struggling to pay debt and you have a low income, I have done a video on how to pay your debts, and I'm going to put it here, and I'm also going to leave the link in the description box, so you might want to check that video out. I'll see you in that video, so bye for now.